Hello friends, I'll welcome you to the video lecture on journal entries. We'll now take up a second problem. In our earlier videos, we have done some basic journal entries. We have learned how to record some basic transactions. We'll try to increase the complexity in this particular problem. Okay. Now, let us take up an example here. Let us say the business is Bell Laptops. The name of the firm, the name of the entity which is doing this business is Bell Laptops. So they are into the business of manufacture and sale of laptops. You can say manufacture and sale of laptops. Okay, so this is going to be the business. Now, before we go into the problem, we'll revise the golden rules of accounts once again. What are real accounts? Real accounts deal with assets which the business has. The rules are debit what comes in and credit what goes out. Then we discussed about personal accounts. Personal accounts are the people with whom the business is going to deal. Debit the receiver, credit the giver. If somebody owes money from the business, they receive something from the business and they owe money to the business, then they are debited. If somebody gives money to the business and the business owes money to them, then we credit his account. Okay. Then we also discussed about nominal accounts. Nominal accounts deal with expenses and losses and incomes and gains of the business. Rules are debit all expenses and losses, credit all incomes and gains. So expense and losses should be debited in the books of accounts and incomes and gains should be credited. In our previous videos, we have learned how to record basic journal entries. In this problem, we'll try to increase the level of complexity. Okay. Let us start with the transactions. Let us say the owner introduces cash as capital. I'll be little quick. Let us say he has invested rupees 20 lakhs into the business as capital. How are you going to record the journal entry? The entry is very simple to record. Cash is an asset for the business. It is coming in. It is real account. Hence, it is debited. This money has been given by the owner to the business, and as you remember, we said we are accountants of the business. We are recording the entries in the books of the business, and as per the business entity concept which we discussed, the business and the owners are distinct. They are two different individuals. So the logic here, I'll write down cash, real account, debit what comes in. Now for the business owner, he is a personal account. He is a giver. He has given money to the business in the form of capital, and the business owes this money back to the owner. That is why we have to record him as a giver in the books of accounts. That is why his account is credited. We are actually recording in the books of account of the business that this money is owed by the business to the owner. That means whenever the business is closed down or whenever the owner wants, he has a right. He can claim this amount from the business. That is why we are showing him as a creditor in our books, or we can say a person who has given some money to the business and the business owes this money back to the owner. Let us say the owner introduces further capital. He is investing some more money into the business. It requires a lot of money. Let us say rupees, again 20 lakhs, but this time it is deposited in the bank account of the business. So what the owner has done is he has to introduce further capital. Instead of introducing hard cash, what he is doing is depositing the money in the bank account of the business. So a separate bank account has been opened, and in that account the owner is depositing money. So The bank is receiving money on behalf of the business. This bank account belongs to the business. I'm going to debit bank. Why am I going to debit bank? Bank is receiving the money of the business. So bank account has to be debited, and the bank owes this money back to the business because this money belongs to the business. And who has given this money to the business? Owner. So whenever owner gives money to the business, we use the term capital. We don't write the owner's name here, we use the term capital here. Now, what is the logic behind the journal entry? I'll write down the logic also. Bank, it's a personal account. Bank has received money on behalf of the business. The bank owes this money back to the business, hence it has been debited. Capital, I'll write within brackets, the owner of the business. Again, he is a personal account. Whatever money he has given to the business by depositing it into the bank, the business owes this money back to the owner. That is why we are recognizing him as a giver. So what does this mean? This entry means that bank owes us 20 lakhs and the business owes the owner 20 lakhs. So we are remembering bank as a receiver in the books, and we are remembering the owner as a giver in the books. So we are saying bank owes us 20 lakhs and we owe the owner 20 lakhs rupees. Let us go to the next transaction. The owner introduces his land worth rupees 10 lakhs. What he is doing is, for running the business, he wants to make and sell laptops, and to set up a factory the business needs a piece of land. The owner is already owning a piece of land. He is introducing that land into the business. Now, as I told you, we are accountants of the business, so we have to think as if we are accounting for the business and not for the owner. We are accountants of the business. So land is an asset for the business. It is coming in, hence it is debited. Now, the business owes the money in return for land to the owner. You can say we'll record 2 capital here because the owner has given this land to the business. So we are going to record capital. So what's the logic? Land, real account, debit what comes in. Then the second aspect is owner. We use the term capital in place of his name. We said personal account, giver, credit. So what we are doing here is, we have said that the business has received an asset worth 10 lakh, but in exchange we have not given any money. So this land belongs to the owner. So who has given this money's worth to the business? The owner. So we have to remember him as a person to whom the business owes money. So we have to remember as if the owner has given us a loan. It's like a loan for the business. But he is not like other lender who would continuously demand interest or who will ask the loan to be repaid in installments. He will wait. Okay. So for the business, this money is owed back to the owner. For the accountant, this money is owed to the owner. So till the time we give the money back to the owner, he has to be recorded as a creditor in our books. So now, using these 3 journal entries, if we prepare a simple capital account, now capital account is nothing but a capital ledger account. Capital account, if I am preparing in the ledger, it will have 3 entries in it. If you observe, in the first entry, the owner introduced 20 lakhs as capital in the form of cash. Then the second entry, he introduced some money by depositing it in the bank, 20 lakhs, and then he introduced some land. So what will happen is, because of these entries will appear in the capital account like this: by cash 20 lakhs, by bank 20 lakhs, and by land 20 lakhs. Not 20 lakhs, but 10 lakhs. So what happens is, now if you see this paper in the ledger called as capital account, you can see that this is the total amount of money invested by the owner into the business, and this is the money owed by the business to the owner. This is the purpose of recording these journal entries. Let us take one more transaction. Owner introduces stock of laptops into the business. Let us say rupees worth 5 lakhs. The owner is already having some laptops. Now it will take some time for the laptops to be manufactured and sold. So till the time, what he is doing is he is having some laptops already with him, and now he wants to put them into the business as capital. So what is the entry you are going to record? Stock. I'll use the term here, purchases, or you can even use the term stock. Purchases account debit rupees 5 lakhs to, again, capital, because the owner has given this stock to the business, credit 5 lakhs. You can even avoid writing credit here. If you put debit, it is automatically understood that the other entry is credit here. Whenever you put the term to here, it means credit. So what's the logic? Purchases nominal, we can say stock account. Till the time we sell it, it is an asset. Once we sell it, the cost price of the stock becomes an expense for us. Stock is real account, debit what comes in, capital, personal account, giver, credit. Let us move on and see some more journal entries. Now the owner is going to start his business. He wants to carry on the business of manufacturing laptops and selling it. So now he does the next step. Factory constructed, spent cash rupees 3 lakhs. Let us say he has constructed a factory and he has spent the cash which he had, the business had, and he has spent rupees 3 lakhs. So what is the entry in the books of accounts of the business? We are constructing a factory building, so I'll write factory building debit. It is an asset for the business. The building is going to give us benefit for more than a year. It is an asset. Hence, I'll debit factory building with 3 lakhs. And in return, we have paid cash towards the expenses. So cash account is credited. What is the logic? Factory building account is real account, debit what comes in, cash is again a real account, credit what goes out. So this is the logic. Next, we have purchased some machinery for the factory. Purchased machinery, issued a check rupees 5 lakhs. We had some money in a bank account, if you remember. So what we are doing now is we are purchasing some machinery for our factory and we are issuing a check. What will be the entry? Entry would be machinery account debit 5 lakhs to bank account 5 lakhs. We are not paying cash. The money would be paid by when we issue a check, the seller of the machine will present the check in his bank and our bank is going to make the payment to him. So what is the entry we are going to record here? Machinery, it is real account, comes in, hence debit. Bank, we have issued a check. Bank is going to pay money on our behalf to the vendor who sold the machinery to us. Bank is going to give money on our behalf. We'll say personal account, giver, credit. If you remember, when we deposited money, we have debited bank. When we withdraw money, we have to credit bank. So when we deposit money in the bank, bank becomes receiver. When the bank pays money on our behalf, when we withdraw money from the bank account has to be credited. Okay. Let us see the next transaction. Purchased a delivery truck for credit rupees 4 lakhs. So what we have done is we have purchased a delivery truck for credit, and the vendor has given us 3 months time to make the payment. So how do you record this journal entry now? Again, truck is an asset for us. Truck account debtor 4 lakhs. We have not paid cash, or we have not issued a check. We have promised to make the payment after 3 months. So till the time we make the payment, we have to remember the vendor. Let us say from Tata Motors. We have purchased a truck from Tata Motors. So till the time we make the payment, we have to remember the person who supplied this truck to us a giver in our books. We have to make him a creditor in our books. Tata Motors account credit 4 lakhs. By doing this, what we are doing, by recording the journal entry, what we are doing is we are recording that there is an asset which has come to the business worth 4 lakh, and we are also recording that the business owes money worth 4 lakh rupees to the vendor who supplied us the truck. Okay, so we'll learn few more journal entries in our next lecture. Thank you.